Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education. In this video, we're taking a look at the Fed, talking about the Federal Reserve and the results of their meeting tomorrow, which come out at 2 p.m. And we also get a summary of economic projections, which is absolutely worth picking through to see what they have to say. And of course, we're hanging on for that Jerome Powell speech at 2:30 p.m. If you haven't seen my previous videos, go ahead and check those out on the CPI. Plus, there's also some pretty cool stock stuff that if you were paying attention to those videos, you may have been caught on to some opportunities. Let me know if you took advantage of any of those opportunities that you found. So back to this video though, we're going to take a look at the Fed, see what they expect to do in June and expect to do in July, how the CPI ties into that, and then also talking about July's meeting, like how today, what we saw with the CPI influences what we could see in June with the CPI, and I'm going to tie all that into what I expect to happen with the markets, and I'm going to share a diagram with you for that. We're going to keep that all in one clean, neat little video, and by the way, stick around throughout this video and I will tell you how you can get up to 17 free stocks by using the link down below for Moomoo. Let's jump right into the CME FedWatch tool. As of the recording of this video, we have 21 hours remaining. 2 p.m. tomorrow is when we actually see from the Fed what the results are. Are we going to get that rate hike or are we going to get a pause? And if we scroll down here, we can see as of right now, as of the recording of this video, 93% chance according to the bond market that we see a pause from the Fed. That's a darn near certainty. If you had 93% certainty for all the different trades and investments that you made in the market, you would be astoundingly rich. So 93% certainty that that's what we get. And will we see that 7% chance, which is honestly statistically significant? Anything above that 5% chance is actually pretty significant, even if I do stumble over my words. By the way, I have safety glasses on top of my head right now. I was working on my daughter's nursery. We're down to the single digits for her to be born. So fingers crossed that goes smoothly. And you can give me your shout outs and well wishes down in the comments for this. So that's June. What we're looking at here is that a pause is what's most expected right now. And what we also want to look at for this is we want to look at July. And so for the July meeting, that happens on July the 26th, which means we get another CPI, and that is important for us. Like I said, I would tie in the CPI and how I think it's going to impact the markets because of the way that it impacts the Fed's decisions with their rate pauses, rate hikes, and hopefully sometime down the road, we also see that pivot where they actually start to cut the rates. And I think the small cap stocks are really holding back on their big movements for that time to take place. But that's another video for another time. When we look at July, it looks like we get what's most expected right now, almost 2/3 of a chance. Actually, as a matter of fact, this is 5/8. If we take 5 divided by 8, you get 0.625. So anyway, 5/8 of a chance here. 62.5% chance that we get that rate hike taking place. 1/3 of a chance that we pause again, which again, still fairly significant. And honestly, for a 50 BP hike, they're actually looking at that and saying, it could happen. We get that raise in June of 25 basis points, get that raise in July as well. So very small chance there, but it could happen. I think the two biggest things that we want to pay attention to are the pause versus the raise, and that's in the diagram that I have. But I want to hold it off until I talk about the markets. Going over to CPI. CPI was excellent. It's probably about as good as we could hope for. This chart's actually a really good one here. When we look at the blue line, that's all items. Nice steady downtrend. Food and energy are the volatility that we have in that. And energy really played a big part in dragging us down, especially energy commodity, not to be confused with energy services. When we see that, when we take out food and energy, you can see we still are on a steady decline. It'd be nice to see it happen a little bit faster. And I have a spreadsheet that I'll show you for that. As a matter of fact, I will do that right about now. So there we go. So this is a lot to look at right now, and I'll zoom in and tell you the important parts of it. So when we're looking at this, pay attention to the red and the blue. So what you see in this highlight that I have here with the red and blue text, this is June, and the red areas, this is for CPI for all items for June, which gets reported in July. So about the middle of July, definitely before the FOMC meeting. Anything in red is under 3% year over year inflation as a headline number. And I think that would be absolutely incredible for the markets. We actually came in at 0.1%, which put us at 0.1% month over month for May, which put us at 4%. We were so close to dropping down into the threes, but we can skip the threes entirely. Look at this. Let me zoom in a little bit more for you. so you can see these numbers, we can skip the threes entirely, and it doesn't take that much. So when we look at all items, if we get anything 0.3% or below for CPI, all items, that's including food and energy, we skip right past the 3s entirely and we drop down into the 2s. And I think the markets would absolutely go nuts for that. So that's something to pay attention to there. And we'll see those expectations as they come along. And just know that if it's expected to come in 0.3% or below for all items, that the market is really, really going to like that, especially if it reports those numbers. So be on the lookout for that. Now in blue, I want you to pay attention to all these numbers. So this goes all the way up to 1% month over month, which annualizes to 12%, which would not be great for us. I don't think that'd be good for the markets at all. But you'll notice that even if we come in way hotter than 0.3% month over month, we are still under 4%. So they can take a look at that, look at the headline number and be like, hey, inflation's still dropping because of that significant peak that we had back in 2022 in June. So just pay attention to that. When we look at all items, so here we have red, blue, and black. When we look at this, I'll zoom in a little bit more so you can see those. And what we had in the month of May was 5.3% year over year. And when we look at that, we can again come in at 0.3%. So just the same as what we had for all items. This is core, so this is less food and energy. This is everything that drops us down into the 4% range that I have in red for you. If it's in blue, this is 0.4, 0.5, 0.6% month over month, which is not annualized well, but still we can come in with a much hotter read than what we had, and we can still come in year over year at lower inflation. It takes all the way until, I believe, 0.7 month over month until we actually get even, followed by higher readings for the month of June. So July for CPI, I think, is going to be incredible, and that's something that we just need to wait and see. However, it does tie into the next thing I have to show you, which is the little diagram that I made. And there we go. I'm working on my hotkeys on this to make these transitions smoother for you guys. All right, so this is plain and simple what we got going on right here. It's just a little Punnett square, if you will, if you remember from bio classes, from recessive versus dominant traits, a little bit like that. So if we get a June pause, I'll indicate that in green because I think that that would be strong for the markets. If we get a July pause as well, you'll notice that the two intersect in that top box. That would be a best case scenario because the Fed is likely done hiking as long as inflation doesn't change course on us. We can be in a very good situation. I'm going to switch up to red. So June raise, and that doesn't necessarily mean the markets are going to fall down. However, it's not going to be as good for the markets if we do see that. So give me just one moment here to redraw my highlighter, and we'll make sure that it's straight this time. Oh, that's going to be beautiful. Oh, look at that. Absolutely gorgeous. So now let me move into my pen tool here. We'll switch it over to black so we can see that. So looking at those values, let me zoom in. So if we get pause in June, pause in July, I think the markets are going to really react favorably to that. And if we get a raise in June and a raise in July, I think the markets are going to react negatively to that. And if we get a raise in June and we get a pause in July, so this is where red and green are crossing each other, I think we'll see this happening where we have a little bit of a dip in the markets and then things settle down, the market adjusts to it, and we take off from that. And that's because the market does not currently expect there to be a raise in June. 93% chance that we see a pause in June. So I think that that would be a little bit unsettling to the markets. And then it also throws out the question mark for July as well. So I think that we get like a little bit of a V, a little bit of a dip in the markets because we get essentially rug pulled, to use the phrase. We get surprised by the Fed, and that would be something that might not necessarily translate that well. And if we move over to the June pause, July raise, which is currently what the market is already expecting, I think that we could see just a smaller dip here, but I think that we still move onward. And the reason that I think that we still get a little bit of a dip in the markets by what's expected is that the market has run up so far. So I do want to go from this and I'm going to go into Moomoo. Like I said, you can sign up using the link down in the description and get up to 17 free stocks by doing that. And I'll cover more of that in the video. But just take another moment, take a look at this diagram to see what I'm telling you. Pause. I think the market would absolutely love. So Jerome Powell says we're pausing in June. Woo! And we are going to hold steady just to see if we follow that course. July is likely going to be the same thing. The market's going to go nuts over it, and I think we continue to rally on a little bit higher with the S&P, a little bit higher with the NASDAQ, and we can see some continued strength with our stocks. Now, let's go just polar opposite. raise in June, raise in July. So we get something unexpected in both, well, unexpected for June. And then on the heels of that, I think that people would be very surprised to find out a raise in July. Well, remember, that was 4.5% chance that we see 50 basis points in change by the time July rolls around. So 25. The markets are not going to like that at all. That would be a definite shock to the markets. It does not break the bull cycle that we're currently experiencing right now. I do think that it would rattle us pretty hard, though, that we would see that drop and then we would kind of stagger a little bit before recovering. So maybe it's a little bit unfair to have that downward, but I think that's the immediate reaction that we would see. June raise, July pause. We get a softer dip, a slower dip, maybe not as deep, and then we continue our movement upward. And then June pause, July raise like we currently expect. I think we just see a little bit of softness followed by just a continuation. Be like, cool, that's what we expected, party on. And so, maybe we get a little bit of a sell the news event because we're getting exactly what was expected. So that's what I have for you there. So let's move on to Moo. This is the final thing that I have for you. There we go. All right, so with Moo, here we're looking at SPY. So we're looking at the SPY right now, which tracks the S&P 500. And I think that we easily have, let me see from today's close. I reported on this in my earlier video that I said that we could possibly see about 2.5% upside. We put in about half, little over half, so 0.66% up in the SPY, which, like I said, tracks the S&P. We probably have about another 2% to move up from there. If we do see some softness, we have probably about 2% to give up from where we're at. And if the Fed comes out very hawkish, raises in June, and signals that they can possibly also raise in July, then that's where I think that we actually start to fall back down pretty significantly. And I think the markets will be pretty ugly, but that is not currently expected. I'm not going to spend a lot of time dwelling there. Let's go over to the Qs. There we are. So the Qs, let's zoom out just so we can see the astounding run-up that we've had in the markets. It's been good. The bulls have really been on a tear, really after the sideways trading, going all the way back to end of April, and now we're into June. So we're almost on a 2-month run moving up, and there will be some time that it does come back. So I think if we get what's expected, we experience a little bit of softness. If we get pause, that's where I think the market starts to go back and retest the all-time highs that we got. So that can happen. In the polar extreme where we get raise, that's something where I think we might come down and revisit this last peak, and that would be a smackdown for certain. And we really have to listen to what the Fed said and the reasons for saying it. And like Jerome Powell's words are also going to have influence. So it's not just about the decisions that they're making, but about the signals that they put out and seeing hawkish or dovish. So some of this might be a little bit oversimplifying as I go through and talk about those things. So I did say that I wanted to talk about Moo a little bit. So if you hung around the video this long, just make sure that you take a look at this offer, especially while the stocks are running the way they are. You can actually really take advantage of the stocks that you find here. So here's how you do it. You download the app using my link, and what that does is it supports my channel. So thank you if you choose to do that, and I really appreciate it. You can see the different stocks that are offered, valued between $3,000 and $2,000. You deposit $100 or more, 5 free stocks, $100 cash reward, yours for trading, and then also a free share of C3AI, which I don't know if you saw that pop today. That pop on C3AI, it's back up over $40 a share, at least as of the market close. Last I looked at it, which was about 20 minutes shy of market close. More good news for that. And I did also say in one of my previous videos, there was an opportunity there that it was going to move big. I thought down, it ended up being up, but it didn't matter because I did say that, it would, whether you did a straddle, strangle, whatever on it, that there was still a lot of opportunity to be found there. Then you can see for $1,000 and $5,000 is how you really take advantage of getting the 16 free stocks, $100 cash reward, and for $5,000 or more, if you have that sitting on the side, something that you can move into this, you'll also get that free share of Tesla, which, holy cow, they're on a run too. And then Google moving into the AI space, or I shouldn't say moving in, but capitalizing on the AI momentum. That's also something that's been pretty incredible to watch. So I saved that for the end of the video for you guys. Thank you if you stuck around through that. And also, if you choose that link, thank you. Thank you very much. Otherwise, you can support this channel using the Patreon link down in the description. If you want to get more access to my Patreon exclusives and also access to my private Discord, I spend my days over there. So should you need to get a hold of me, talk to me, bounce some ideas off me, that's just one way that you can interact with me directly rather than using that very laggy YouTube comment system that they have, because I do not get notified as all of them come out. I don't know why it's so spotty, but it is. Maybe they're just trying not to inundate or overwhelm the creator. So thank you guys for watching this. I hope you liked it. If you did, please consider hitting that like button, hit the subscribe button, ring that notification bell, hit me up down in the comments, say hello, Tell me what you liked about this video. Go back and watch some of my other videos, especially some of the more recent ones, because there's a lot of price action left on the table for a lot of those stocks that I've talked about recently. So make sure that you take advantage of that. I am Dr. Stock, Doctor of Education. Remember, learning is earning, my friend.